Assalamu alaikum. I'm Imam. I am MDA Salam, Assistant Professor, Department of Business Administration, School of Business, Asian University of Bangladesh. Now I discuss course code MBA 5256, Financial Accounting, Advanced Financial Accounting. Today I discuss the name of this chapter is Ledger. Here we discuss what is the ledger, types of ledger, how to prepare the ledger, and how to create the balance from the ledger. Now, what do we mean by accounting ledger? An accounting ledger is an accounts or records used to store bookkeeping entries for the balance sheet and income statement transactions. Accounting ledger journal entries can include accounts like cash, accounts receivable, investment, inventory, accounts payable, accrued expenses, and customer deposits. Basically, accounting ledger is a balance of the final books of bookkeeping. Here, first of all, we are record the accounting transactions in our books. The name of books is journal. Then the transactions we are transferred to a final books. The name of the book is ledger. We know that if we discuss any kinds of the transactions, which transactions occurred in the first time, then we just discuss that is we are classified these transactions, the two part of these transactions. One is the debit, another one is the credit. So after that, we are classifying these transactions, the two parties. One is the debit parties, another one is the credit parties, and both the parties are some sort of names, like as assets, like as liabilities, like as cash, like as furniture, like as computer, like as inventory, receivables, payables, salary, income, revenue, discount, etc. So, ledger is a final books of the transactions. In our accounting practice, ledger are three types: general ledger, debtors, and creditors. The general ledger accumulates information from journals. The purpose of the debtors ledger is to provide knowledge about which customers owe money to the business and how much. The creditor ledger accumulates information from the purchase journal. Now, how we are prepare the ledger books? If any student wants to prepare the ledger, then he just follow the 5 simple steps to write and prepare the ledger accounts. So, business organizations need to write and prepare the ledger accounts wherein all the transactions are recorded permanently under the different heads of accounts. As per the accounting principles, the transactions just after their occurrence are recorded in the primary books of account journal in chronological order or date of the explanations. But it is not possible to determine the complete result of the transactions from the journal, because in a journal books a lot of transactions record in a days. But if anyone wants to know the knowledge from the only sales, but if any on the other hand, any kinds of the users, if one just knows only what is the sales volume is today's, then this is a difficult task for anyone for collect the information from the journal books, because a lot of transactions occurred in a days, like as sales, salaries, miscellaneous expenses, petty cash, or a lot of transactions occurred in a business in each and every day. So that's why a journal books is a primary books of the accounts accounting system. So we cannot find out easily a specific result from the journal book. So that's why organizations must be write and prepare the ledger accounts for easily collect the information for each and every types of accounts. Like as a businessman wants to know the what is the cash balance is today. So obviously he goes to cash books and find out the what is the amount of the balance is today and how much amounts in reserve in the bank and how much the discount he got today and how much he discount provide to the customers today. Each and every informations from collect the cash books, which is the cash related. So we can say easily if anyone wants to know the information properly, or if anyone wants to know the how much profit and how much assets, how much liabilities in an organization, he or she must be follow the ledger books and maintain the ledger books properly. So now I discuss how to prepare the ledger books. So the 5 simple steps of the writing and preparing ledger books. Number 1, draw the form. If anyone maintain or prepare the ledger books, he or she must follow the two ways. Two ways or two rules or two formulas. One is the golden rules. Also, it is called a T form. Another one is vertical form, which is called a modern form, or also it is called a balancing form. Not only it is the model form, it is also be a balancing form. So if anyone prepared a ledger books, then he or she must follow the two forms of the ledger. One is the T form, another one is the vertical form. In a T form, a form has 8 columns. One is the left side, another one is the right side. Is in a left side, it has 4 columns. One is the date, particulars, ledger page. Sorry, this is not ledger page. This is the folio, or this is called a journal page, JP, or this is also called a reference number. And then finally, this is the column is taka. Also in a right side, it has 4 columns. One is the date, and one is the particular, and then reference, and then taka. And then in a vertical form, it has a 7 column. One is the date, number 2 is the particular, number 3 is the reference, number 4 is the debit taka, number 5 is the credit taka, and then number 7 is the debit balance taka, and then number 6 is the debit balance taka, and then number 7 is the credit balance taka. So now we can easily draw the form, which is called a T form and which is called the vertical form or balancing form. Number 2, posting transactions from the journal to the respective ledger account. At the beginning, I said that any transactions must have a two parties. One is the debit party, another one is the credit party. Each and every party has a specific name, or like as capital, cash, furniture, cash, bank balance, salaries, rent, commission, inventory, opening inventory, closing inventory, equipment, truck, investment, debenture, trade license, goodwill, etc. First of all, we are critically evaluate the transactions and we get the two parties. One, like as a businessman invests taka 1 lakh. If we analyze these transactions, we got the two items. One item is the cash, another item was the capital. Obviously, cash is an assets and capital is the liabilities. So cash is debit, capital is credit. So obviously, we are posting the journal two books. One is the cash books, another one is the capital books. And then number three, following, put the page number for the journal entry on the ledger accounts folio column. That means I said that reference number. If anyone prepared the ledger account, obviously he or she used the reference number of the journal. So which day the journal is prepared, but when the journal is prepared. So obviously we make the reference for each and every transactions in a journal books, and we are obviously give and put the reference number in a ledger books. And the number four is the casting, separating the debit and credit amount. This is very easy steps. That means assets or asset shows the always debit balance. Liability shows the always credit balance. So when we prepare the cash books, then obviously a cash book shows the debit balance. A capital book shows the credit balance. And the step number five, balancing. Find out the differences between debit and credit to get the debit and credit balance of the account. Balancing after finish all the transactions are transferred from the journal to the ledger books, and then obviously we complete our balance at the end of the day. So we can easily find out the balance from the each and every books, like as cash books, capital books, purchase books, sales return, purchase return, accounts receivable, accounts payable, investment, debenture, goodwill, investment. Each and every book shows the balance after the end of the period. So it is called the final steps, and that is called a balance. So from the discussion, we are easily knows that how to prepare the ledger account. Now, for an example yourself, the total of the debit of a particular ledger account is $10,000, and the total credit of the ledger account is $8,000. Then the differences between these two sides amounting to 2,000 is a debit balance. And what is the how to calculate the credit balance? On the other hand, if the total credit money column of the particular ledger account is greater than the debit money column, the balance is called credit balance. For example, the total credit money column of a particular accounts 5,000. Now I want to annotation for highlights our discussion. So here we see that a particular column accounts is 5,000, and there the money of the column and the debit money column is the 4,000. The differences between two amounts is taka 1,000 is the credit balance. All the income here, we have seen that all the income and liabilities accounts always shows the credit balance, that is credit balance of a ledger account mean income and liabilities. On the other hand, obviously there the debit balance of ledger accounts means expenditure and assets. So from here we are easily said that all the transactions in the world, we are classified only four types of accounts. One is the assets, another one is the liabilities, one is the income, another one is the expenses. Finally, how to prepare the ledger account. We are getting the knowledge from this example 1. Here we are seeing that to start a business of the deposit taka 10,000 of your savings into the business bank account. What is the journal of the transactions? What is the journal of these transactions? All of you knows that this is a very simple journal. It is, if you deposit a taka into the bank, obviously bank is a debit, because here we are deposit into the bank our reserve fund. So if we have any kinds of the money and money source, obviously it is the strength of us. It is the part of us. So easily we can say that a bank account is my assets and it is my strength, is my positive attitude in our business. So obviously it is a debit. On the other hand, when we started a business, then obviously we bring some sort of money from our family, from bank, from any other sources of the finance. It is called a capital or owner's equity. When anyone invests first time into their business, then obviously it is called a capital. যদি আমরা বাংলায় বলি তাহলে আমরা সাধারণত বলে থাকি হচ্ছে কি, আমি মূলধনের কারণে ব্যবসা করতে পারছি না, বা আমি পুঁজির অভাবে আমরা ব্যবসা করতে পারছি না। তো আমরা খুব সহজে জানি যে পুঁজি শব্দের অর্থ হচ্ছে ক্যাপিটাল, আমরা মূলধন শব্দের অর্থ হচ্ছে যে কি ক্যাপিটাল। সুতরাং এই পুঁজি বা মূলধন বা ক্যাপিটাল, it is the internal liabilities of an organization. একটি ব্যবসায়িক প্রতিষ্ঠানের জন্য এটা হচ্ছে কি আন্তঃদায়, because people have a lot of business, but each and every business, but liability is not equal each and every business. Which business is greater than or obviously peoples are only liable for the share of a business. How much share he or she own of the business, that is only the liabilities of the business. তো আমরা খুব সহজে বলতে পারি যে হচ্ছে কি একটা একটা মানুষের অনেকগুলো বিজনেস থাকতে পারে, কিন্তু সেই বিজনেসের প্রত্যেকটা জায়গায় তার সমান দায়বদ্ধতা থাকে না। কারণ হচ্ছে কি একটি বিজনেসে সে যে পরিমাণ টাকা শুধুমাত্র কি করবে, ব্যয় করবে, সেই পরিমাণ টাকাকে আমরা বলবো যে হচ্ছে কি তার লায়াবিলিটিস। এবং ওই ওই পরিমাণ টাকারই দাবি সে শুধুমাত্র কি ওই প্রতিষ্ঠানে করতে পারে। যে আমি আপনার প্রতিষ্ঠানে 10 টাকা ইনভেস্ট করেছি, সে কিন্তু চাইলে 20 টাকায় দাবি করতে পারে না। সো দ্যাটস ওয়াই the how much amount a owner invests to the specific business, that is only his owner's equity. So it is the internal liabilities of a business, because this amount are must be returned to the ইনভেস্টরসকে অবশ্যই আমাকে ওই পরিমাণ টাকা ফেরত দিতে হবে। সো যেহেতু এটা ফেরত দিতে হবে, আমরা জানি কাউকে যদি কোনো কিছু দিতে হয়, ফেরত দিতে হয়, তাহলে সেটাকে অবশ্যই আমরা কি বলি, লায়াবিলিটিস। সো দিস ইজ সো we can say it easily, a owner's equity is a credit. So now how we are transferred this uh, journal entries into the ledger books. Here are two parts. One is the bank, another one is the owner's equity. So obviously we are maintaining the two books. One is the bank account, another one is the owner's equity book. So when we are write down, first of all we are prepared the bank account ledger but bank ledger. Here opening balance is 0, because that is the balance, because we are start the business first time. So opening balance is 0. So that's why how much amount of the owner invest to the bank or deposit to the bank, টাকা 10,000, টাকা 10,000 deposit into the bank by the owner. এখানে আমরা যে তিনটা শব্দ আমরা আগে দেখেছি, এখানে আমরা দেখছি যে টাকা 10,000 deposit into the bank by the owner. সো এই যে ফর্মটা আমরা দেখতে পাচ্ছি, লেজার অ্যাকাউন্ট দেখতে পাচ্ছি বা লেজার বুকটা আমরা দেখতে পাচ্ছি, এই বই থেকে আমরা খুব সহজেই যে কেউ আন্দাজ করে নিতে পারে যে এই লোকটা বা এই বিজনেসের কি আছে, এই বিজনেসের ব্যাংকে 10,000 টাকা আছে যেটা মালিক দিয়েছে। এই কথাটা খুব সুন্দর করে এখান থেকে সহজে আমরা কি করতে পারছি, বুঝতে পারছি। যে এই বোঝার জন্যই আমাদের হচ্ছে যে কি লেজার অ্যাকাউন্টটা আমরা সাধারণত কি করে থাকি, মেনটেন করে থাকি, বা এ বিজনেস মাস্ট বি মেনটেন দ্য লেজার অ্যাকাউন্টস। Here also a part 2, the owner's equity ledger. Here also we see that টাকা 10,000 credit, because owner's equity is the internal liability, so that's why it is the amount in credit side. সো এখান থেকে আমরা কিভাবে বুঝতে পারছি 10,000 টাকা মূলধন হিসেবে কোথায় আছে, আমার ব্যাংকে জমা আছে, এই কথাটা আমরা এই লেজার থেকে খুব সহজেই কি বুঝতে পারছি। সো a ledger account is so much interesting and important books or important procedure in a accounting for the student, the business department. So thank you so much all of you. আর অবশ্যই আপনারা কি করবেন, আমাদের এই ভিডিওটি দেখবেন এবং হচ্ছে কি আমাদেরকে পরামর্শ দেবেন। কোথাও যদি কোনো ভুল থাকে তাহলে আমরা পুনরায় এটাকে আবার কি কারেকশন করে আমরা সাবমিট করব।